All right. I guess we are live. So, good morning, good afternoon, and good evening, everyone. My name is Rachel from Movie to Canada, and I am your host for today's session on how to build your credit score as a newcomer to Canada, and of course, why it matters. And I'm pretty excited about today's session because whether you're planning your move to Canada, have recently landed, or you've already been settled, or you're already settled in, today's session is full of tips to help you understand credit in Canada, build a solid credit score here, and make smart financial moves to set yourself up for success here. Now, I also just want to quickly share that this webinar is proudly brought to you by Scotiabank. And with that, I'd like to introduce a very special guest joining us today, who is no other than Diksha Garg from Scotiabank. So, hi, Diksha. Could you tell us
Hi,
a little bit more about yourself?
Hi, Rachel. Thank you for having me as here. And my name is Diksha, as you mentioned. I am an advisor at Scotiabank in Heartland branch in Mississauga, and I have been with Scotiabank for more than over 2 years now. And I love my job as an advisor because this helps me to, help even the newcomers and the people in my area and the people around me to help in their financial goals, meeting their financial goals and their financial journey.
Perfect. Yeah, great to have you with us, Diksha. And yeah, I'm so thrilled to have this topic because as a newcomer myself, I was unsure about what I didn't know about credit scores, and plus coming from like various like viewing we view money through different cultural lenses, and so having that understanding of what how credit works in Canada would be so helpful to our viewers out there. And yeah, let's
I completely agree with you on that because even I myself was an immigrant like almost 3 years back. I landed and it was a cultural shock for me as well, like credit, because where I come from, credit was like a hype or a myth. Like people used to were afraid in my country, if I would say, like no one wants a credit because the mindset is like we spend only what we have. They are not they're not accustomed to the concept of credit. So even for me initially it was something, okay, how should I, then as I went through I learned, and I so that's why I know what is like the initial fear and what are the initial hesitations that some of our customers or the new immigrants who are moving to Canada might have. So I'm more than happy to express my experience, share my experience with you.
so you mentioned that you were a newcomer yourself. How did you? Can you share us a little bit about your journey to Canada, then, if you don't mind?
Yeah, sure. So I landed in Canada in May 2022, just after COVID. I was supposed to land before, but due to COVID, there was a setback. And once I landed, it was a shock for me because back in my country, like finances are people don't do much attention, or no, it's not their daily focus banking. But here you have to be on your toes to know about your accounts. You have to have your all details all the time, you know. But so that was a complete shocker for me, to be very honest. And once I landed, we went to the bank, and I was like, we don't go to a bank to open an account in our country. We just get it. People come at our home in back in our. That was just the first difference which I noticed. Then having an appointment and the advisor concept was completely a new thing for me. So all those things was a great experience, and now I know, okay, these are the things that. So once you land in a country, first thing is to select an institution and have an appointment with an advisor so that they can guide you and start your new financial journey, because once you land, it's a completely new life that you are starting. You cannot carry your back home, concepts and myths with you. You have to fresh start.
Right.
So
No, it's a very important point that you brought up. I actually came to Canada as an international student myself, and
mhm.
like how I viewed credit from back home was very different from how I what was taught here. And I had to go through the process of like kind of unlearning some of the habits that we were so accustomed to back home. For example, how we viewed credit. Credit is like no limits unless, because we had this concept of like you much rather spend money that you have. But here, it's taught that you can use that as your leverage to actually access better financial opportunities. And so, yeah, I'm pretty excited. We have a lot of things to unpack here, in terms of building your credit score, even like just learning the basics of what credit score is, the common terms. So
Right.
we'll get on with that
Sure.
right now. All right. So, actually, before we dive in,
Mm,
I actually want to share just a quick update
mm,
about Scotiabank's Start Right program.
right.
Actually, it just got some exciting new features as of November 1st, 2024. So, very recent.
Yes. So as November started, our new fiscal year started, that is fiscal year 2025. So we have quite new, very welcoming offers, especially for the Start Right for under Start Right program. Start Right program is basically for the new immigrants so that initially when they land to the new country, the banking and the new initial settlements, settling down becomes much more convenient. There's one thing they don't have to worry about initially. So with Start Right programs, you get some leverages like for first year, your accounts are free. You don't have to worry about the account, your checking account fees. Plus, you get a credit card of up to 15,000 based upon like your requirement, unsecured credit, so that you can start your credit score, building your credit score, and start your financial journey. And you can have unlimited e-transfers. And for first year, you also get if you are there are people who like to invest, do self trading, you get free self trading I trade transactions and under that. So there are a few certain features. For more details, I would recommend going to the scotiabank.com website, and from there you can see the Start Right program. There are a lot of things that there are so many details you can uncover under that.
Right. I love how you mentioned that this program is specifically
Yes.
tailored to help newcomers start on
Yes.
the right foot. So, yeah, just like going through some of the perks here, you can earn up to $2,200 in value in your first year, unlimited no fee international money
Mhm.
transfers, which like in the Philippines, we like to send money to our family as well as like a way to say thank you. So having that
Mhm.
no fee international money transfers actually helps a lot. And plus,
Right.
this benefit welcome bonus of up to $800 is also very enticing. Um, you also
So
mentioned there's no. Oh yes, go ahead.
So there's no fee for the first year. Usually in Canada, how it works, you have a fee associated with your checking account. So for first year, that fees is waived off for the newcomers, so that there's less burden on them, because initially when you settle down in a new country, you have so many expenses to take care of. So in with this, it helps them a little relief, though I won't say like it's a lot, but still it's a lot of things that you can uncover, especially with the welcome bonus. If you fulfill certain, like if you open a investment account and there are certain criteria which are mentioned on the website, if you go through, there's a welcome bonus that's like completely specifically designed for you guys, so that you can have some additional like funds for your initial expenses.
Right. Yeah, and I actually, I mean, I'm just reading through the comments right now. I
Mm-hmm.
think it's a question worth answering at this moment, but it's from Akinola. Sorry if I butchered your name, but yeah, they asked, can someone open an account before landing?
So if you are a new immigrant, specifically, I won't recommend doing that, because there are so many documentation. We need your IDs and everything. So it's better to come in the branch and open an account, because that way we can guide you better what type of account is better suited for you, because there are certain things, the number of transactions you will be doing, the purpose of your account. So I would always recommend coming once you land with your documents and everything, because that way it's more convenient. Because even if you open the account online before you land, there are certain then also you I would recommend you will have to visit the branch for your debit card, because even so you cannot get a debit card before landing, right? We cannot
Right.
mail the debit card outside the country. So I would recommend visiting a branch that is close to your location once you land. That would be the best option.
Right. Thank you. Thank you for answering that. Yeah, so definitely worth checking out. This is the Scotiabank Start Right program.
Right.
Yeah, terms and conditions apply, and you can find that link here, guys. So if you want to check it out, see all the perks for yourself, you can visit this link as seen on your screen. Now, let's move on to giving you guys a little overview of what we'll cover in today's webinar. It's actually, there's a lot going on. So, but we've segmented it in stages, so it's all in digestible bits. So we'll start with pre-arrival. So basically, this is everything that you need to know about credit before you arrive in Canada. Basically, setting the stage for your financial success from day one. We'll move on to your first week in Canada, where we'll talk about the critical steps to take during your first week here. And then, of course, we're going to zoom out a little further and also cover how to boost your credit score by building good financial habits in your first year. And finally, remember, guys, that building a strong credit score is a marathon, not a sprint. So we'll go over 5 key benefits of how a strong credit score can open up opportunities for you in Canada. So with that, let's dive right in, shall we? So, Diksha, for my first question,
Mhm.
what I mean, I guess it's good to give everyone a 411. So, what is credit anyway, and how does it work?
So basically, credit is a trust that bank shows in you, like how much bank can trust you with their funds. Basically, credit is a trust that banks shows you. So that should not be a big concern for you guys. Credit is like a revolve. It can be revolving. It can be secured. It can be unsecured. So basically, it a trust which bank offers you at the end of the day. So it is not much to be worried about. So in a lump sum situation, if I'd say, it's a trust bank shows towards you.
All right. And could you perhaps explain why it's important for newcomers to start building a good credit score as soon as they arrive?
So when you arrive, you start from the beginning. Whatever your credit history was there in your own country, that is not considered. Whenever you start landed as an immigrant, you start fresh. So it's important to start from the beginning, because it takes time to build credit. You cannot build credit in a month or two. So it, as you mentioned, it's a marathon. It's not a sprint, right? So taking your words. So let's see. I would say it's important, because if you have a good credit score, it will help you not in just like in the long term, in good, like if you look at the bigger picture, if you're going for your first home buying or a car purchase, let's say, or any big amount of credit, you want to have any big credit, your credit score is the first thing that any lender or any institution would look at. So that's why it's very important to have a good credit score from the start.
Perfect. Well, thank you. Now, actually, you touched on this a bit.
Mm-hmm.
A lot of newcomers might be curious if their credit history from back home could play any role here. So you mentioned that we're starting from scratch. I just wanted to know, like, if there is any of whether international credit histories do have any impact on credit in Canada. Let's say you have good credit back home or bad credit. Does that have any bearing when you land here?
So when you land as a new immigrant, you do not carry your previous credit history. You start from the scratch. You are provided your own SIN number from where you start as a sorry, so fresh. So even if you have a, let's say if you had a bad credit history in your own country, or you didn't had any credit history or a good, no, no, none of those things matter. So you start from the scratch, and it's not that you start. Credit score is basically three number digit, right? From
Mhm.
000 to 999. But when you start fresh, that doesn't mean you're starting from zero itself. Uh, okay. So on
Yeah.
an average, when you start, you are given a decent score provided through the CRA on your SIN number. It's up to you if you take it forward or you get it down if you're not using your credit score credit wisely.
Okay, is there like a general like number that newcomers start with, like from 0 to 900? Is there like an average that, oh, when you land, this is like the number that you'll be hovering at, or?
It's not a specific number, it's just a general, like not exactly the okay, you will be given 650. It's not like that. It's just
Mhm.
like something between 650 or 700 is initially provided to you. So going down the road, when you get start using your credit, if you are using overusing it or underusing it, based upon that, you maintain you get your own credit, you start building your credit history.
Perfect. And actually, like this, I'm just reviewing the
Mhm.
comments, and I see a comment from Steph here that I feel is very relevant to what we're discussing.
Mhm.
So, what steps can they take from the start so that they hit the ground running to build a good credit score here?
So, in order to hit the grounds running a good credit score, first thing, there are a few steps that you can start with. First is not overutilizing your credit and not underutilizing your credit. Overutilization doesn't mean that you cannot use the whole credit. Suppose you have been given a credit of $1,000, let's say an example, especially usually the international students are given a limit of $1,000, let's say. So it doesn't mean that you cannot use the whole $1,000. You can, but when your statement is generated, your statement should not reflect more than the 30%. There's a rule of 30 for between 30 to 40%. If your statement is generated before between 30 to 40%, that is considered the best utilization of your credit. Secondly, underutilization. Suppose some people do take their credit card, but they're so afraid to use it. Oh, we might not overuse it, or if we use it, our score might go down. So at the same time, if you are not using the credit given to you, your score might go down. And on top of that, the most important thing is making timely payments. Whenever your statement is generated, two things are mentioned: your statement date and the due date. And on your statement, there's one thing called full payment and the minimum payment. If you want to maintain a good credit score and make the ball running on a higher level, like towards a higher score, make sure you are not just making the minimum payments, because making minimum payments will impact your score towards a down road. So
Right.
always make the full payments. Worst case scenario, if you are not able to make the full payment like before the due date, at least make the minimum payment.
Right. Now, I'm under thank
Mhm.
you, by the way, for answering. But I was under the impression that this is like applying for credit card as soon as you land. Is that something that's part of the things to do when they land, like apply for a
Oh
credit
yes.
card?
Oh, yes. The first thing is like when you land, when you go to an institution or any bank, when you open your first checking account, at the same time, you should get your credit card right away under the Start Right programs. Most of the institutions, especially Scotiabank, as we have a Start Right program, we do offer the credit card to the newcomers so that they can start building their credit history. First thing for anyone to have a good credit score and to maintain a good credit score is to have a credit. So,
Right.
yes, first thing is
Okay.
to have a credit card which best suits your needs.
Okay. And I mean, that actually brings me to my next question. So, what products or tools would you recommend for newcomers? Like, are there specific options from Scotiabank that support this?
So, basically, on our website, we have something called reward calculators, credit card rewards calculator. So if you go into that, you can, there are different criterias where you put your daily expenses, which then shows which is the best credit card suits based upon your expenses. That's the best tool that a customer or a new immigrant can use to see what is the best credit card that you can use. Yes, as we can
This
see,
one.
if you see the credit card reward calculator, if you scroll down, calculate rewards, scroll up,
Scroll all the way down.
scroll up, scroll up, scroll up.
Oh, okay, sorry.
Sorry, if you can a little bit more,
A little
you
bit more there.
calculate, click
Ah,
on cal-
see.
calculate rewards. So base, if you
Ah,
even, it gives you, and you can put all your expenses, and on based upon your expenses, how much, which will be the best credit card for you. Based upon that, you can see if you pull in the numbers based upon your expenses. Or also, if you click on the other, and you just scroll a little bit up. Sorry, my bad.
oh,
Little bit up.
oh, up.
Up.
Okay.
If you click on average spending, like if you are not sure about the details, like okay, how much, if you put in an average number, let's say 1,000 or 2,000, it will give you the best uh, credit cards which are suited for you based upon your expenses, and what are the rewards that you will be getting, how much you will be saving on the each credit card.
No, yeah,
So
this is so helpful.
yes, especially when you are new to the country, you are not sure about the detailed expenses like on grocery and gas and those things, but you know on an average, like if you put a roughly average, that can give you, also it also gives you like first year reward, what you will be getting as a new uh on yearly ongoing as well, rewards that you will be able to collect.
Wow, that's very helpful.
Mm-hmm.
I think yeah, having the right tools like that actually like guide you through each step of the way. That way you're just like corralled to one option
All,
is very, very good.
and also you can compare between different credit cards based upon your, expenses, so which is best suited for you at the
Yes,
same
and I
time.
guess I think we'll touch on that a bit, or we'll circle back on that. So yeah, I appreciate the 411 on credit. So all right, I guess let's switch gears for a bit here and talk
Mhm.
about uh, now your first week in Canada. I mean, the first week.
Mm,
I mean, you mentioned that you came here
mm,
newly landed as PR. Your first week must
yeah.
have been like right? So this topic is perfect because
Yes.
people watching can know what to do on their first week after arriving in Canada, especially
Mm-hmm.
when it comes to setting themselves up for financial success. So, I mean, if we focus on the 3 points below,
Mm-hmm.
um, I mean, we've already talked about the Start Right program. So I
Right.
guess we should move on to the next recommendation, which is
Start with.
on building connections, aka meeting with a financial advisor. So, Diksha, could you explain what newcomers might expect from meeting a financial advisor and why they should tap into it?
For sure. So first, when you land, first week can be quite overwhelming for any new immigrant because it's a cultural shock. You see different environment, temperature difference, so it can be quite overwhelming. So meeting the advisor can help you solve at least one of the bigger aspects is like settling your finances. Because when you meet a financial advisor, they can guide you not just for your accounts or your day-to-day expense, but on a bigger picture, on your long term plans as well. Like okay, you are an immigrant, definitely in some year, like in couple of years or down the road, you want to buy a house or you want to buy a car, they can also advise you on those things, and start those things going running, right? So meeting an advisor help you on a bigger picture because accounts, okay, you can, once you land, you can open accounts online, you can do certain things online. But when you meet an advisor, you can expect them to give you an holistic approach, not just on your day-to-day banking, but your investment, how you gonna plan to save. Because moving to a new country can be expensive, like it is expensive initially. So how to manage your funds, and at the same time, what are the aspects that what they can expect of the banking here, right? Because they are not aware of how the banking works in a new country. So the advisor can guide them what are the things they can expect, okay, what statements, how it works, all those things. And when they meet an advisor, it becomes quite easy, or I would say more, people become more confident for their banking in a new country. So those things.
Mhm.
And also advisors can guide them on a longer pitch, on a bigger picture. So meeting an advisor is at most important in the first week when they're looking to settle
You bring up a very important point because even when came to Canada as a student,
down.
I thought that meeting a financial advisor is for like big adults, or something like, oh, it's pretty intimidating walking into the branch and like meeting someone. And I also felt kind of shy to admit again, like what I don't know about credit scores. Um, but it was so easy to just walk in and have someone walk you through the process, no matter how big or small your questions were. And like just having that confidence, that in-person interaction, telling you like you're on the right track, or this is the steps that you can take to hit the ground running. Those are very, like, that's the really good guidance.
So that's the role of the advisor, because when you are new to the country, you are very hesitant, you have tons of questions in your mind. And when you are in an open setting and on online, you can get confused. You don't have until and unless you have one-on-one interaction, you cannot open up, you cannot ask those small questions. You feel like, am I may I might not look stupid asking these things. But when you are in an advisor's office, advisor make sure you are feeling comfortable, you are open, you can express yourself, they can ask you, even like new immigrant, they can ask any questions. They should not feel any hesitance, right? So
Right.
that's the purpose of meeting the advisor.
Perfect. Yeah. Now let's move on to the third point, and this is actually we talked about this for a bit, and this
Mhm.
is what I'm most intrigued on, which is all about choosing the right credit card. Um, I mean, you mentioned earlier that there are
Mhm.
different types of credit cards for
Different people.
situations. So maybe,
Yeah.
yeah, maybe could you talk about like
So basically,
what specific credit card and what their use case is?
usually credit cards offer two things. Either they will offer reward points or a cashback. These are the two big categories. We divide the credit cards based upon that. So if it's a rewards, with Scotiabank, we give like scene points, which the customer can redeem for their groceries, their movie tickets, or like for their travel. If it's a cashback, that is deposited to either their checking account or their credit card account based upon the customer request, whatever they are confident in. Okay, so how to choose which credit card is best for you is solely depend upon the customer scenario. So some customers, they know, okay, I might be using more scene points. I know I go a lot of, especially the young students, which are bachelors, or the teenagers. They like going to movies, right? So
Mhm.
for them, scene quite can be quite appealing, because whenever they will be using their credit card, they might be getting they not might they get scene points, right? So they can use those scene points for their movie tickets. They don't have to spend extra on movie tickets. For them, the scene reward points is the best card. But some people like cashback, because they are not interested in the reward points. They don't use scene. They're not Scene doesn't, some for some customers, based upon the amount they're spending. It's also depend the credit card also depend upon the pay scale. Some, like if you have an annual income of around, say, more than 60 k annually, so we have premium credit cards which give you better reward points, better cashback. So it all depends upon the customer to customer, which, and choosing the right credit card is at most important, because I've seen some scenarios where people have good income, right? They are eligible for a better credit card where they can get better reward points, but they are still sitting in a, say, no fee card, which gives them less reward points. So looking at the complete picture, what customer is, what they're earning, what they can get, right? So that is at most important, so they can get the maximum utilization and the best perks of the credit card. So that's very important, choosing the right credit card based upon the customer profile.
And you know what? I was like doing a little bit of digging up,
Mm-hmm.
and I stumbled
Mm-hmm.
upon this webpage from
Oh,
Scotiabank, which is so
yes.
helpful. it's
I know.
I was toggling with it in the background. Like basically, it's just a set of questions that you can go through, and it actually filters down the right credit card
For
that
you.
fits your needs, right?
Yes. So basically, if you like put on your details, like these are just generic questions, not very detailed oriented, like what you are looking for, what will be your what will be your usage. So it will give you the best credit card suited to you. It will give you a couple of options. Based upon that, you can select from down the road.
Yeah. So, for example, if you're a permanent resident in Canada,
Residence, you like
yeah,
travel, you like cashback, or there are some people who, because the interest on a credit card are usually 20 to 22%, and some people know that they will be carrying balance. For them, having a lower interest rate is very important, right? If you know that you will be maintaining a balance, you won't be able to pay off the balance within the time period. So for them, having a value visa, which is a lower interest rate credit card, is important.
right. Yeah, this is so interesting. Like I really like how it's so easy to kind of navigate and kind of answer the questions. It's not as
Yes.
overwhelming.
It's
And plus,
just a very friendly interface.
right. Yeah, perfect. And let me just share that link on the screen just for our viewers to know where to find that. It's this guy. Ooh, it's a little bit wordy, but maybe you guys can take a screenshot and then type it out afterwards. But it should lead you to that questionnaire on choosing the right credit card. So I'll give you guys a moment to type that out. Now, um, yeah, perfect. So I think finally, could you, Diksha, share
Hmm.
some best practices for using a Canadian card responsibly? Like, are
Yes.
there specific types of cards that would be especially helpful for newcomers building their credit? I know those are two separate questions, so we'll just
So
break it up.
basically, yes, I will. Thank you. So, Rachel, the best thing to have a good credit score is making sure that you are not missing your payment. First thing, if you miss a payment like once or twice, it can first thing it have dual effect. First thing, it's gonna increase the interest on your credit card interest rate on your APR. For the people who are not aware what APR is, that's annual percentage rate. That's the institution charges on your credit card if you carry a balance. So if you miss two of the payments, continuous payments, your APR gets increased by 5%. So if it was 20%, it's gonna rise to 25%, which I guess nobody wants. So second thing is making sure you're making your payments, and also you know what kind of, first thing, you are very I would say very cautious of like where you are giving your credit card details, because in Canada you have to be very cautious of how you are using your credit card, where you are putting your credit card details. It's very easy to get hacked, and making sure you know the transactions that you are doing, like you need to monitor your transactions as well, because if god forbid some you mentioned your details on some website or something, and transactions are not authorized with you, and it can get a hit on your credit score for sure. So you have to be very cautious about your credit score and your credit transactions where you are giving your details. And choosing the right credit card is, as you like, what will the best way is to know like how much and what is your daily expenses would look like, and what is like how much you will be spending on groceries. Suppose you're a family of four, so you know this is how much I will be spending on grocery approximately. I won't say you know the exact figures, but yeah, knowing your expenses is utmost important for choosing the right credit card.
Right.
Hmm.
Just reading some of the comments here,
Hmm.
we have a question from Jade. So
Hmm.
she just wanted clarity on upon landing, we open up a bank account and then max secure employment, or is it like, do I guess maybe rephrasing her
And
question, do we need to secure employment, like open a bank account and secure employment before we apply for a credit card?
so
Hopefully, I'm
basically,
understanding the question.
if that's the question that Jade wants to know, that if he needs to get a job for before applying before applying for a credit card. Under Start Right program, you can get a credit card without a job as well, so that you can start building your credit history. As far as line of credit is concerned, if you are a PR, we do need your employment information for the line of credit, but a credit card can be applied before you secure a job.
Thank you. Okay, perfect. And I also just wanted to clarify for Antoinette. Yes, we will be answering live questions at the end of
Mhm.
this deck. We have a dedicated Q&A segment. So any questions that we may have missed from this discussion will be entertained there. So for everyone watching, if you can hold off your questions to the end, we'll circle back to it. And of course, Diksha will be here to give us some guidance. Thank you. All right, let's move on to now our first year. Let's swim
Yeah.
in the deep end of the pool here and look at some key financial habits to focus on during your first year in Canada. So we've listed five, and Diksha
Mhm.
will go through them one by one.
Yes.
First is using your credit card
Card.
responsibly. I think
So
you've dabbled a
first,
bit on this,
yes.
but can
So
you
let
name
me
like
give you.
a common mistake?
Yes, so first thing is on choosing the right credit card, which we have discussed, I guess. Then using it responsibly is at most important. I would like to give more focus on that, because for the first year, it you are not used to the credit card concept, so it's very easy to get an impact on your, or a negative effect on your credit card very easily. And once the credit score goes down, it's easy to go down, but it's hard to build it back again. And first year you are using credit card, so it's very crucial. So the using it responsibly is like making sure you are making your timely payments, as I said before as well, not waiting until the due date for making the payments, because at times if you are making the payment from other institution or even within the same institution, it can take a day or two to reflect the payment. So I always advise any of the new immigrants or any of the clients or the customers, make sure you are not waiting till the last due date for making the payments. Also,
Perfect.
the best way is like setting a pre-authorized debit for your credit card. You can set a pre-authorized debit so that whenever your statement is generated, automatically the system can pay your credit card. You don't have to worry or see, oh, when is my due date, when is my bill due. It will automatically pay your bill. That is the best way in case you are so overwhelmed, you have so many responsibilities. So that is the best way to take care of that thing.
Now,
Then
like since we're moving on to like making timely payments, actually this was actually a point of confusion for me. There's a Can you explain the difference between statement period and due date? I know
yes.
that due date is like when we actually have to pay the credit bill, but yeah, maybe you could explain that
Okay.
better for
So
our
how
viewers.
credit card works is you are given a credit for a period of 30 days. Say, let's say from 1st to 30th. On 30th, your statement will be generated, right? And after
Mhm.
that, once your statement is generated, you are given a grace period of 21 days to pay whatever your statement has generated. So that after 21 days, whatever days, that's your due date. So
Right.
it's not that you have to pay on due date. That's the time period, that's the grace period you can pay between the statement date and the due date. In between that,
So
that's
you
the last date before which you have to pay. If you don't pay until your due date, the interest starts calculating.
Oh, speaking of, like, why is it important to avoid making late payments?
So it is important to avoid late payments. As I said, the APR, if you make a late payment, your if you miss two of your payments or make late payments, your APR rises by 5%. Suppose it was 22% or 20%, so it will rise to 25 or 27%.
Yikes.
And once it is rise, it cannot be reversed.
Oh, really?
Yeah. So that is performance based. So basically, what is a credit? Coming back to the circle, so credit is a trust that bank shows towards the client, right? So if you are not able to meet that trust, so the interest rate rises.
Is there like a maximum that the APR can reach? Like, I'm not testing it out in terms of like avoiding all make more making late payments, but is there a cap for it, or it'll just continue to rise?
So no, it won't continue to rise. What then you become delinquent, right? Bank sees the delinquency. So if for people who are not aware, delinquency is when you overutilize your credit. Suppose you were given a credit of $1,000 and you have used your credit card for 11, say 1,100, right? And you have not making the payments for next two. So bank sees that for 2 months, then your APR rises. Then again bank gives you a notification, right? Okay, you have missed a payment. You always bank gives you a notification if you're missing the payment. Even if you're not acting on that, the APR doesn't rises.
Now we have a question for Alex here. Does paying your balance early have any impact? That's a good question. Is there a
Yes.
merit?
So if you pay your balance before your statement is generated, definitely it, not every time, once or twice is good, but if you are paying it before the statement is generated, in that way it shows like you are not using that credit, right? Because once your statement is like what credit are you using. So if you keep paying it before the statement is generated, once or twice is good because it shows how responsible you are towards the your credit. But if you keep paying that, it means that you are not using your credit enough. So it's best to have 30%, like say again, the $1,000 you have a credit, you have a limit of $1,000. Make sure your statement is of around 20 or say 200 or 300. You don't have to wait until the due date. As soon as the statement is generated, you can pay it off in a day or two or on the same day. And just to give one more information on that, once your statement cycle is fixed, every month your statement will generate on the same day. Suppose your first cycle was generated on 25th of say November. So next month also 25th of December your statement will be generated. It doesn't moves around, so you can keep a track that way as well.
Right. And that brings us to a very important question
Mm.
on monitoring credit.
Mhm.
Is there a way for people to check their credit score? And if so, how?
So usually each institution in their app, mobile app, you can check your credit score each month, and that's not a hard credit check, so that does not impact your credit score. You can keep an eye what your credit score is, and it's important to keep monitoring and what credit checks have been applied to your credit score. At times, especially when you are a newcomer, you go for different institutions, you go for buying a car or purchasing like even a mobile phone or a you know s- cell phone connection. They, even if you don't get that thing, they might do a credit check, which is not a good thing for your credit score. So it's good to monitor your credit score, and that can be done through your mobile app, or TransUnion or Equifax, either way.
Now, there's this common question that I get
Mm.
about how often you should check. Some people think that checking your credit score will often hurt their score. Is that true?
So if you look into the credit score through your app, or logging into your own Equifax or TransUnion account, it won't affect your credit score. If a third party does your credit check, like suppose if you go into an institution to get a line of credit and they do a credit check, that affects your credit score for sure. But if you are checking your own credit score, even in the app or through your TransUnion, that does not impact, because that's a soft pull, like a soft check. That does not impact your credit score for sure.
Awesome. That's good to know.
Yeah.
And we've talked about this already in terms of credit utilization
Mm.
ratio, but
Yes.
like in simpler terms, can you explain what that means?
So basically, credit utilization, if suppose if you are given a credit and if you are using it too much, like that's called overutilization. Like you are totally relying on your credit, whatever limit was given, you are using it that completely. That is also not good based upon your, if we look to as from a credit score point of view. And you are given a credit and you are not using at all. Like okay, you took a line of credit and you are not using it. So basically, someone gave you something and you are not using it, that impacts it, that also impacts it negatively. So overutilization and underutilization both have a negative effect on your credit score. So maintaining a 30-40 utilization is the best considered for you getting a good credit score. And using a credit and building a credit history is utmost important in this country, I would say, specifically in Canada.
Now, I've actually heard that like some people use this as a strategy of basically paying down their balance to the 30% or 40% credit utilization ratio
Mhm.
before the
The
statement
statement is,
period. So, yeah, I want to see what your thoughts are on that.
so that's the best strategy. So if you are given a credit of, like, say, again, I'm using very small amounts so that it's easier for people to understand. So like, say, if you are given a limit of $1,000, doesn't mean you can, and that 30-40% ratio doesn't mean you can only use 300 or 400 out of that. No, use it, pay it off, use it, pay it off with your debit or your, funds. But make sure when your statement is generated, at that time it's only 300-400 balance on your credit card. That balance at the time of your statement is not more than 3 or 400. Especially for the newcomers, they, when you tell them about the 30-40, this maintain 30-40%, they get confused, like, okay, we can only use up to 300 out of 1,000. No, it doesn't mean that you can only
Mm.
use 300 or 400. Use it to the maximum, that's fine, but make sure when your statement is generated, before that you pay it off as much as like 600-700, and your balance is only 300-400.
Right. That's good.
Okay.
That's good to know.
Yeah.
Yeah. Yeah. I always
Mm.
thought, yeah, that was also one of my like misconceptions. Like, so I was
Mhm.
always like, um, I've actually like, for
Mm.
example, like had two credit cards where I try to just bounce off the
Mhm.
30
Mhm.
30 off of each one.
Yeah.
And actually, that brings us to our
The
next
next,
important point,
yes,
which is like the risks of opening multiple credit accounts. So,
that,
can you touch on that? Yeah.
yes, having too much credit can also be a negative, because that means people get confused about that 30-40 thing, and okay, I can only use 300 or 400 from this one, let me get another credit card, I will use 30-40 from there. And especially when you're new, you feel like, oh, and also here everyone offers credit card, right? Even our mobile providers have credit card. You go, there's so many credit cards offering in our country, right? Like around, even in our neighbor, like any Walmart, with so many credit cards. And they say, oh, this is like no credit check credit card. But just to give you a heads up, any institution other than banks, other party, let's say, I don't want to name, but any institution, anyone giving you a credit card will do a credit check for you until and unless pre-approved. And having too much credit can have a negative impact. That means you are solely relying on credit, because each time you get a credit card, there will be a credit check and there will be a hit on your score. And
So,
also you will have to maintain so many payments, right?
yeah, keeping a tab
That can,
on.
all the payments, that can also be overwhelming. Even god forbid you miss one payment, again your credit score will get hit, right? And
Right.
once it shows a delinquency on your credit history, it remains there for a longer period. You cannot remove that delinquency no matter what, if you paid that later or not.
So, what would you say is an ideal number of credit cards that newcomers should aim to have?
um at max I would say two, not more than that, to be very honest. For that's
Okay.
my personal opinion, like as an advisor, it's good to have two, because you cannot solely rely on one. It's good to have two, but going and getting credit card from each and every place is not a good idea. Though it looks very attractive in the initial days, like, oh, see, I have this one. Each credit card comes with its own perks, no doubt, right? But
Right.
you have to look at the bigger picture, not just those perks which are attached to that credit card.
And I just saw this comment from Daria.
Mm-hmm.
She's asking, is it perfect utilization ratio if I don't use the credit card?
No, as I mentioned before as well, underutilization. That's called
Mm.
underutilization. You have been given a credit and you're not using it. That can also have a negative impact on your credit. Because though you feel like, oh, I might use it, and like some people, I've seen so many people like myself sitting in the bank. I've seen people, oh, we have a credit card, but we don't use it. But that's also impact your credit score negatively. That means you bank trusted you with something, but you're not using it, or the
Right.
any institution that given you the credit card. And using having a credit product and not using also impacts your score negatively. So to answer her question, no, that's not a perfect utilization. That also impacts your score negatively.
Right. Well, thank
Yeah.
you for that.
Mm,
Now let's move on to like so we're closely approaching
mm,
the end of this webinar.
mm.
So let's look
Right.
beyond understanding how a strong credit score in the long run can unlock many opportunities for newcomers in Canada. So
So
first, yes, go ahead.
So if you have a good credit score, like say there are so many opportunities you can unlock. First thing, lower interest rate, because whenever any institution is giving you a new credit product and they do a credit check, first thing when they do a credit check, they look at your credit score, and based upon your credit score, they give you the interest rates. Let's say on a line of credit, it's always prime plus the adjustment factor, right? And that adjustment factor is solely based upon your credit score. So if you have a good credit score, the adjustment factor will be lower and you will get a lower interest rate on that. Also, even for the if you're going for a car purchase or a home financing, let's say, so first thing, any application on that side also, if you're doing a big major purchase, if you have a good credit score, you will definitely get a lower interest rate on that. Second, as a newcomer, obvious, like I won't say like 100% of the people, but uh, let's say 95% of the people do go for a rental property, right? They either a basement or a condo or a detached based upon the requirement. So whenever landlords, first thing that they ask is what's your credit score. Because credit score shows your reliability. How reliable are
Mm.
you, based upon how trustworthy you are, or how trustworthy you are on based upon your finances. So that's why then limit getting a credit limit. Let's say if you have a good credit score, you have a good back credit score that shows like how reliable again. So you in when you apply for a, say, line of credit or a credit card, if you have a good credit score, you can get a higher limit based upon your income or in future. Because you cannot maintain the same credit, right? If you want to increase your credit score later in future, you need to have a good credit score. If your credit score is not good, I don't think so it's possible to get a higher limit of credit card. So it is very
Right.
important. And
Um,
coming to the last point, more negotiation power, definitely. Because if you know that your credit score is good, you can tell the people in the bank or wherever you are going for a credit, see, like I have a good credit score, I can go anywhere. Like I might have a like I have a better chance. If you don't have a good credit score, you have to settle down for whatever you are getting, right? So
right.
definitely a higher credit score open so many doors for you.
Now, I like how you touched on a couple of. Thank you for covering
Mm,
all
mm,
the how a strong credit score can open up
mm,
opportunities for you. And I guess like I just had a couple questions in each one. So when you brought up
okay.
like higher credit limits, is there anything that as a newcomer I should be mindful of when requesting a credit limit increase? Is it like
So
based on like only ask when you have a higher paying job or an increased salary or I don't know. Yeah.
So higher credit limits, credit limit can be on your line of credit, credit limit can be on your credit card, either, right? So higher credit limit, so when you start as a newcomer, you are starting from the scratch, right? So you get up that basic credit limit, initial limit, that, but once you start building your credit, and later, maybe down 6 months down the road or in a year, if you have a good credit score, you were able to achieve a good credit score based upon your credit habits, paying your bills on timely, then after an year you can definitely go for a higher credit limit on your credit card, or you can apply for a line of credit with a higher limit.
Right. And then touching on, like, since a lot of newcomers
Mhm,
are looking for accommodation, and
mhm,
somehow the having a good credit score can improve their chances of securing a rental.
mhm.
um, my question is, like, what about those with no credit history? Like, what options do they have to increase their odds of um, being a prospective renter?
So usually whenever it's a new immigrant, they don't have a credit history. They start from a scratch, right? Because
Mhm.
as an immigrant, you start from a scratch. So securing a good rental property, that is based upon like once they start building, once you start your credit, in a month or two, you start getting your credit score. Your credit score starts reflecting, right? So after 6 months down the road, when your credit score is good, you want to move, you want to secure a good rental property, definitely credit score plays a role in that.
Okay, perfect. Yeah, so that kind of ends our discussion, but
Yeah.
this time we'll be opening up the floor to questions from our viewers. I think we have a couple to go
Hmm.
about here. So, yeah, let's go through them one by one, I guess. Oh, I already have a question here.
Yeah.
Does a good credit score in the USA do anything to help you at the beginning?
No, because when you move to a new country, you start from a scratch. No matter your US credit score, you have a good or bad, doesn't help you here because you are starting as a beginner, right? It should not, though I'm happy that you had a good credit score over there, but you have to start from here as a fresh.
So, like, also, I
Mm,
forget if we touched on this. So there is the credit score range, right? 0 to
yeah.
900.
Yes.
And then what's the average here in Canada? That's,
So
or like, what's a good credit score to aim for?
So the good credit score to aim for is always, we, as an advisor, I would say having more than 800, which is not the best, like not a very easy scenario, but on an average, having a credit score more than, like, bare minimum is advised at 650, because that's that is called like average score, but having a good credit score is always more than 750 is always advised for,
Seven.
yes, so that you have good opportunities. You don't have to worry about, like maybe good interest rates and everything. So more than 750 is always advised.
Right. The next question is from Akin Wunmi.
Mhm.
So if if I don't have money, can I get a credit card?
If you don't have money, you get a credit card? First thing, are you a new immigrant? If you are, then definitely under the Start Right program, because that's an unsecured credit. We don't do a secured credit card for the new immigrants. That's a unsecured. So if you're a new immigrant, definitely.
Okay. Next is from Rebecca. How often should we check our credit scores?
So your credit score get updated every month based upon your spending or your credit history, but you can check every month, but that through the app, not through some third party institution or something. If you check every month, that should be fine. That should not be a problem. Each month your credit score gets updated, to just to let you know. You can check in the mobile app under
And
TransUnion.
and then you mentioned earlier there's like a hard inquiry and a soft
Yes.
inquiry. So if you check through for example, the Scotiabank app, that's
Mm-hmm.
a soft inquiry and that
Yes.
doesn't impact your score, correct?
No, no.
But then if
So
you go
if
through a third party, it will.
it will impact your score, like suppose you go any dealership to buying a car and they do, if third party do a credit check for you, it's gonna impact your credit score. But if you check yourself in the app, it should not impact your credit score. That's called a soft pull. So we just, like, you can check what's the level of your score right now.
Perfect. Now, this is from Alex.
Mhm.
Hello, does having finance on a car impact obtaining a mortgage? Good question.
Yes, because that's a liability, right? Because you finance a car, you have a liability. So mortgage is again a liability, though you are securing an asset, but right now it will be a liability. So definitely because it add up to your expenses, right? So having a car does impact you obtaining a mortgage because that reduces your uh, paying income, like monthly expenses. It adds to your monthly expenses. So definitely.
We have a question from
Mm.
Baba GJ. How can I increase my credit limit if I'm an international student?
So basically, for international students, we have a limit set for $1,000. We don't go beyond that because students don't have much expenses. First thing. Secondly, uh, that's like you cannot. If you have 500, for sure we can do a limit increase for $1,000. But if you are a working student, you have a co-op, you have a work permit as well, then we can, based upon your income, we can do a limit increase on your credit card, not
How
the
about
student
like
credit card.
right? How about like let's say they're newly landed, but they don't want the 1,000 credit limit. Can they increase it? Like, hey, can we just at the start just bump it up and
For an international student, you are
yeah.
initially we don't do that
Mm,
because the international students are usually teenagers, like 18 and 19-year old. The credit card concept is fairly new to them. To make
mm-hmm,
sure they are using it wisely, we make sure the limit is something within their reach. It's not too high for them to later how they get, stuck, or they might mess up with their payments or their credit score. So in order to make sure, because it's a start, and how they start, it's going to affect them in the long term in the future. So we make sure they are using it wisely. That's why we don't do it more than $1,000 for their own
next.
benefit.
Perfect. Now, this is from Stephanie.
Mhm.
So it's a follow up question. So, having a credit card debt can help me build my credit score. Should I use 30% utilization even if I have a pretty high credit limit? That sounds a little scary.
So no matter if you have like, no, like let's say 10,000 limit, 15,000 limit, 20,000 limit, it's okay to have those limits. And just let me just so having a credit card debt can help you build your credit, but you have to use it and pay it off also in time. You don't have to carry that balance 30%. You don't the 30%, you don't have to carry that balance. You make sure you are paying it off also in time, not just carrying that balance. Use it, but pay it off as well.
Perfect. This is from Antoinette. Do we have to wait until we are physically in Canada before signing up with you all for anything?
Yes. Yes, you have to be physically in Canada for all those things. Though international students, there's a special program for international students where they can send their funds in the non-registered account. But for PR, permanent residents, and other immigrants like work permit, you have to be physically in Canada to, open a bank account, get a credit card, and everything. Even for international students, to open a regular checking and savings account or a credit card, you have to be in person, physically in Canada.
That's good too, because at least you
Yeah.
know who you're dealing with when you
Yes.
arrive, right? Instead of just like you don't know how you're
Uh,
doing your transacting
Yeah.
online, right? So yeah. Um, we have a question from Shan. Does paying more than the full payment have any benefits for the credit score?
No, that does not, because no matter if you pay it full or overpay it, it does not impact your credit score. Because at the end, the credit score is based upon the credit that you utilize. If you overpay it, it does not impact your credit score, not in either way, not positively or negatively. So just paying it, at times some payments are pending, right? In credit card, I'm not sure if everyone is aware of, there's something called pending transactions. Whenever you
Yeah.
use the So whenever you use a credit card, the transaction might not reflect in your right away. It might show as pending, which means it takes time to reflect on your credit card, and there can be some payments which are pending during the when your statement is generated. So at times we see, oh, it's still pending, but let me make the payment for that as well. So it does not impact it, no matter, because that payment will reflect, or that transaction will reflect on your next payment cycle.
Right. Perfect. We have one from Wazakas. I like the name. Is my American credit score taken into consideration when signing up for a credit card or not at all? I think we touched
Um, we touch
it.
that, yeah, we do not, because we start from the fresh. So no matter which country you are coming from, what credit history you had, so that does not impact your new, because here you start fresh with your new SIN number, your social insurance number. So that should not impact.
Now, maybe I'm thinking too deep into this, but like let's say um,
Mhm.
Wazakas has is decided to keep their American credit score, and I mean American credit card, and then because they have a good credit history there, for example, does that have
Mhm.
any bearing here? Is that like, or is it just in America that okay,
That's
you're
gonna
good
be,
there, you're good there?
yeah, because some people have dual citizenship, right?
Mhm,
S-
mhm.
So that does not impact here, because here, especially that's why when we open an account, we do ask the customer like, do you have any other citizenship, or are you paying taxes other than in Canada? To know, like, because if you're paying taxes in Canada, we need to file that your TIN number and your social security number from there, so that can reflect in your account, right?
Mhm.
But in terms of credit score, that does not impact here.
All right, let's move on to Fatima. Is it possible to upgrade to a different type of credit card in Scotiabank once you choose a certain type of card? Yeah, this is an interesting question because I actually had that question when, like, from student transitioning to a worker. Like, I didn't want to be
Mhm.
stuck in just
See,
the card that I was
yeah.
offered. So,
Hmm.
is there a way? But then you mentioned, right, like if you open a new credit card or an is an upgrade considered unlocking a new credit card account?
So basically, so the transition from student to a work permit, you cannot have the student credit card once you're on work permit, because the credit card we give during, like, we offer for work permit is different, because you are given based upon your pay scale and your annual income. And so when it but switching, if you have an existing, like a immigrant credit card, suppose right now you have something with rewards points, and later you want to switch with something with cashback or with a, so we can do a switch without any credit check, or any, credit inquiry. We do have, because in Scotia, what we can do is, it's called switching, credit card switch. With the same limit, we can switch into a different credit card. At times people do have some no fee credit card or no annual fee credit card, and with lower perks want to switch to a better credit card, and want to pay some fee. You can do credit card switch in Scotia, because it's a revolving credit. We can move the credit that's already available to you.
Perfect. That's good to know. This one is from Claire. So, just to confirm, even if I have enough money to buy a house and service a mortgage on arrival, I have to get a job and build my credit first before I can buy a house. Interesting
So,
question.
if you are looking to buy a house, it depends. Like, are you doing the whole payment, like down, like complete payment? Then you don't need a mortgage, right? But if you have the payment money for the down payment and want to get a mortgage, and you don't have the job right now, so bank do need some reliability. Like, how will you able to service that mortgage, right? How you will able to make those mortgage payments. So that's the job. Basically what job does is gives the bank a surety that you will be able to make those payments, right? So that's what the bank is looking at. It's not that we are specifically want you to get a job before you want to buy a buy a house. It's just to see a source of money that you will be able to service a mortgage.
Next question is from Tien. If newcomers have a high limit credit and a low credit utilization, does that have a negative impact on the overall credit score? High credit limit, low credit utilization.
So basically, when it's a newcomer, we do offer credit cards, but we don't do those limits for newcomers is not very high, because we know initially you are people are hesitant to use the credit card, and people might unfortunately might underutilize it because of their hesitance. So that's why this scenario can be very rare when you have a very higher limit card and low credit utilization. That if you feel so that your credit utilization is low, what I would advise you here, to use maximum, like for your phone bills, for your any payments, instead of doing from your checking account, start doing from your credit card. Not just regular buying, but also your bill payments and everything, start doing from your credit card, so that you can maximize, you can make the maximum take that maximum advantage of your credit card.
Now we have a question from Jill. Are there branches all over Canada or in BC? Yes.
Yes,
Scotiabank is one of them.
we do have branches all over Canada, even in if you are specifically asking in BC, yes, we do have branches in BC. Hopefully, you will find a branch very close to the place that you are living, maybe in a radius of 5 to 10 kilometers, definitely.
Oh yeah, coming from Vancouver myself,
Yeah,
and yeah, there's plenty of branches, Scotiabank branches
yeah,
around us, big or small neighborhoods.
yeah.
Um, Now we have a question from Becky. If you are coming over with funds, does it help with credit score to deposit the funds in a Canadian bank?
So, Becky, if you are coming with funds, that does not impact your credit score. If you deposit here, first thing, for cash is not advised to use. First thing. Secondly, obviously, you should deposit those funds in your checking account for your day-to-day transaction. But I would advise using your credit card for your day-to-day transaction, and then paying with those funds your credit card. In this way, if you have funds and coming with funds and using your credit card more often and paying with those funds, will definitely impact your credit score, and you will have a higher credit score. But make sure you are making your timely payments with those funds.
Right. And I guess I mean, we were set to finish in an hour, but I guess we'll entertain maybe five more questions and call it a
For sure.
day. Awesome.
Definitely.
But Diksha, thank you so much for being so
Not a
accommodating.
problem.
I,
Not
I
a
actually
problem.
have a better picture now of how to look at credit. So thank you for that.
Not a problem.
Um, yeah. So Akinola, does Scotiabank sponsor students to study in Canada? Hmm.
We do have professional student lines for if the students are like in the professional fields, like medical or lawyer or some those or engineering. We do have special student line of credit. We do have professional line of credit for students. But sponsorship, I'm not sure what is the like what she's trying. Nicola is trying to under that. What sponsors, I'm not clear about that, what she's trying to ask. We do have
Yeah.
specific products for students based upon like if it's a professional course or a regular student line of credit, definitely we do have some things to offer for the students.
Next question from Ozakas again. Can I build credit on an American visitor visa and I'm planning on residency later?
So if you are on a visitor visa, I don't think so you will be able to get a SIN number, which is required to start building your credit history, where your credit is recorded. So no, I'm not sure. Like, no, you won't be able to build your credit history on a visitor visa for sure. And once you are resident, for sure, when you get your SIN number, you can start building your credit history.
Next, what are typical APRs in Canada if you establish good credit?
So APRs for a regular credit card is like 20 or 22% on an average, and if those are the standard APRs. And as I mentioned before as well, if you miss those jump by 5%. So 20 to 22% on those are the average APRs for the credit cards.
Perfect. And maybe the last question we have on here is from Alex. So, does opening accounts with two separate banks have any influence on credit score?
So if we are talking about the regular checking accounts with two different banks, that does not impact your credit score. But if we are talking about two different credit cards, as I mentioned, it's good to
Mhm.
have two different credit cards. That should be fine. But if you are having more than like having multiple credit cards, that does impact your credit score. But if he's Alex is asking about the regular checking account, that does not impact your credit score.
Awesome. All right. And I guess that's our wrap with all the Q&As, and also
Oh,
that brings us to the end of today's live session. Very quickly, I
mhm.
do want to mention that everything that we've discussed today, you can read all about um, using the links on your screen. So you can actually, when you scan, you can take a screenshot of this video, and you can scan this code, or you can also type in the links as seen on your screen. But all of this is to help with understanding credit better, building better financial literacy as a newcomer to Canada. So it's definitely worth checking out. Um, a huge thank you again to Diksha for sharing
My
her
pleasure.
expertise. Thank you so much. Like, you made it so less intimidating to discuss such a heavy topic, and you broke it down in such a way that it is in digestible bits. So I appreciate your expertise in that. And also to Scotiabank for sponsoring this webinar and also supporting newcomers on their financial journeys here. Um,
Always
yeah,
happy to help because I know I was a newcomer at that one time, so I know. So always happy to help the people.
perfect. And guys, if you're ready to take the next step and open an account with Scotiabank, especially through their Start Right program, again, you can scan the QR code on your screen, and it'll take you directly to all the info you need to get started. And of course, a huge thank you to the folks watching us for tuning in. Thank you for your
Definitely.
questions. You've really made this a fruitful discussion. And I hope that you're leaving with valuable tools and tips to help you build a strong financial foundation here in Canada.
Thank you,
So,
Rachel, for having me because it was something I really wanted to do for new immigrants because it becomes so much easier if you have some information available right before that becomes so easy for them. So thank you, Rachel.
no worries. Yeah. And once again, yeah, I'm wishing you all the best in your journey to Canada, and we'll see you at the next event. Cheers.
Thank you.
Bye bye.
Bye
Thanks,
bye.
Siksha. Thanks,
You're
everyone.
welcome. Thanks, everyone.